Many investors say the market is narrow, but our next guest completely rebukes this notion. Is that true?
It's true.
Whoa. Joining us now with a technical look at where the markets are headed is Chris Verrone, partner and head of technical analysis at Strategas Securities. So you got about 5 different things to look at here.
Yeah.
The first one is what? Technology and communications stocks, right?
Well, no, it's the S&P excluding those stocks.
Oh, excluding those. Okay.
And I think one of the big pushbacks that we've heard
is that
with our
it's
market
just
call
technology and communication.
Now, those are leadership, but they aren't the only things working. So S&P excluding those groups
broken out.
is also at a new high. So there's other things contributing to the move. Industrials have been decent, but what I think has not gotten enough attention, if you look at the financials have actually acted really well here. And if we go to the next picture,
ETFs.
I mean, this is on the verge of a massive breakout from this 2-year range. And if you even go back further and look back to 2007, the XLF, the ETF, is about to make new all-time highs. But when you look at the flows, these are flows over the last 2 months, outflows. So no one believes this move. I think that's a good combination for financials to move higher here.
Because on a contrarian.
On a contrarian basis, yeah. And you know what's even interesting? If you look across the globe, it's not just the U.S. banks that have held up here. Even despite very low global bond yields.
Even negative yields.
Yeah, these are German 10s, still below zero. European banks are actually breaking out. First time in 2 or 3 years where there's actually some action out of this group. It's names like Deutsche Bank and Intesa, Unicredit. So this whole group, whether it's the domestic banks or the European banks, despite low yields, very resilient. And I want to show you my favorite one at home, which is still JP Morgan. What strikes us about JPM, for as good as this name has been, the analysts, these are analyst buy ratings, they hate it. Fewest number of buys on JP Morgan at any point since 2003. About 30 analysts cover the stock, only 10 buys. Yet the stock, despite lower bond yields, acts really well. So another one of those contrarian, powerful combinations that we like.
I just love that all the guys that we have on spouting wisdom, when they're all on one side, we know they're wrong, which is great.
What we know is when...
So we have them on, but we use them as a contrarian indicator. That's great.
We do, and we use them as a contrarian indicator when the stock or when the chart acts good. So this is a good chart, and the street neglects it. Now, take the other side of this. Even though we have low bond yields, the yield stocks like a Verizon or some of the consumer staples actually don't act as well as you might expect. This is Verizon relative to the S&P. So you've had bond yields go down. It's actually making new relative lows. So there's no relative advantage to owning some of these yield stocks. If you look at it on a price basis, starting to deteriorate despite lower bond yields. So this is a very odd situation. Yes, we know tech is still very good, but there's some other things like financials and banks which act better. And then conversely, these yield-related plays really don't offer much leadership here.